Right, this will be a daily outlook for Thursday, July 9th. We can see that the previous day's range here left a large rejection block inside the range of a bullish order block. Right, so to me this is pretty relevant information in terms of the weekly profile. I mean, I would say that at this point, okay, because of where this happens and when it happens, right, Wednesday inside of the daily bullish order block, I do believe that the classic sell here in terms of a weekly profile is not on the table anymore. I do think that I mean, obviously I could be wrong, right? It could be tomorrow trades above the previous daily high and keeps on trading lower. But overall, I think that we're looking at a range of a Wednesday low of week, right? Or a Z profile, right? So a swing to Z profile. Obviously, the way that tomorrow opens should give us some information, right? If the market opens and starts trading lower inside of the previous day's wick, I do think that this will favor a low-hanging fruit drawn liquidity towards what would be the 2-day look back here, right? So the high of Tuesday. Okay, well, we can now maybe look at lower time frame charts, but aside from this drawn liquidity, right, if you are able to identify an open low high close profile, you could be targeting the quadrants here either as partials or, you know, low hanging fruit targets inside the quadrants of the suspension block located at 50% of the previous monthly range. Well, also I wanted to look at right, overall from the perspective here of a 3-month look back. Now we have to remember that there's a range low here, which is an intermediate term low. Remember that this intermediate term low formed from the fair value gap located at 25% of the 3-month look back range, right? And you can see that yesterday has traded again inside of this fair value gap, right, and has rejected higher. And again, overall, the higher time frame trend being expansion to consolidation. Right now that price came back inside of discount and is proving to respect what's inside of discount, right, is unable, like we said, to close below the daily bullish order block. Doesn't mean it still can't do it, but meanwhile it's proved to not do it, right? So this is relevant information going inside of a new daily profile. Okay, we can look at the range of the 3-week look back. As I talked about, price created a divergence with what was the range low here of the 3-week look back. Right, Nasdaq traded inside of that level, right, well, inside the daily bullish order block below the range low on a 3-week look back perspective and created divergence, right? And most importantly, has traded back higher. Right now, yesterday's high of day, right, was created at a level of importance that I was talking about coming inside of the day. You can see that the high of day was created at the low here of what is currently an inversion fair value gap. And we said that this inversion fair value gap is relevant to the range because of where it's located, right, being 25% of the previous weekly range. Okay, so today I'm going to want to see the reaction again inside of this level. Right, so at least what I mean is coming inside the pre-market session, right? So preparing myself for 9:30, I'm going to want to see what was the delivery around this level, obviously if it's traded too, right? Because if this level is reclaimed already by New York, this can give me a clue that the drawn liquidity will be higher, right? And in that case, we'd be looking at as we said, the high of Tuesday, right? And then we have that range of a bearish order block again from the previous weekly range. This bearish order block is what currently created what is currently the weekly high here, right? So on Monday, right? So if coming inside New York, this level is inverse, I'm going to want to target these levels here. Right, so we're looking at more or less the range, say, of 30,000, give or take. But, right, this would be also relevant information if price trades to this level, takes out these relatively equal highs here, but fails to displace and reclaim a bullish fair value gap. Right, you can see that inside of this range there's also a SIBI, there's also a bearish mitigation block. So, you know, it could be that price simply sweeps the previous day's high, trades inside of these levels, and fails. Okay, so in my opinion, very important PD ray for tomorrow's daily profile and or New York session profile. If we look at the 3-day look back perspective, right, these were the standard deviations that we had identified yesterday. And what I was saying coming inside of the day, right, was that price came from an expansion to a consolidation, right? And right below this consolidation, we were looking at the levels of the daily bullish order block here. Right, and what I was saying was that it's going to be interesting for me to see how it trades at 50% of this level. Right, was it going to expand, consolidate, expand, reverse? Right, or was it going to expand, consolidate, expand, right, consolidate, expand, and so to trade towards the intermediate term low here, the daily intermediate term low I'm talking about. Well, actually this, you know, you might even consider this a long-term low, right? As it's an intermediate term low that has other intermediate term lows on, right, on the left side and on the right side of it. And what you can see is that, right, price expanded, consolidated. Overall, right, I was talking about a level that will help you gauge order flow coming inside of New York, right, or at least to be able to determine what to draw on liquidity would be for the daily profile. Obviously I was talking about this wick here. Now why this wick? Because this was an order block located at the range, at 50% of the range of Tuesday, right? You can see that the market makes a high of day right at this level, and there was also the range of an old bullish order block located inside the 3-day look back range, right? And again, you can see that the previous daily high here coming right at the lower quadrant of this level. So, you know, now there's a couple PD rays in here, right? There's the wick of the order block. There's obviously a very obvious fair value gap. Well, okay, I mean, let's look at the range here. Okay, well, actually, I wanted to look at this one more time with the quadrants of the daily bullish order block. Right, and exactly, that's what I was saying, right? If the market will, right, would have had expanded, was consolidating, and was going to trade lower towards 50% of the daily bullish order block here, what I was saying is that from there I would start getting suspicious about the market continuing to drop lower, right? And would likely look to anticipate, you know, a reversal or a retracement inside of the range. And in fact, that's what the market ended up doing, right? You can see that it was a continuous consolidation of where price ended up closing from on Tuesday. Eventually London, right, the London session sends price lower towards the range of 50%, and overall the lower half of the daily bullish order block, right? These were levels that aligned with the standard deviations from the shakeout of Monday. Right, left that large fair value gap through here a bearish mitigation block, right? So an old range low. And then you can see that as of 6 a.m., right? 6 a.m. 4-hour candle delivered as a classic buy, right? Eventually followed by 10 a.m. bullish reversal profile, right? So here we have, if you look at the individual phase of price delivery in here on the perspective of a 4-hour candle, you'll see that the 2 a.m. 4-hour candle is an expansion, right? It's a reversal here, a reversal profile, eventually followed by 6 a.m. 4-hour candle being a classic buy, right? So reversal profile to classic buy profile, right? This is a balanced price range, right? Price went from expansion to expansion. It offered price lower into discount targets, right? And once that was offered, immediately rejected higher, right? So I think there's a lot of narrative from this point on to be looking for premium targets. I'm not sure if this is simply going to end up doing this, right, and maybe can consolidate for the rest of the week, or if it's actually going to reverse. But I do think that it should look to trade somewhere near, say, 50% of the range. Right, we have overall this range, 50% of the range is around these levels. And then from there we'll see, right? Here there's a fair value gap of interest in my opinion, right? Obviously this is a level that was cutting through the wick of the order block, was cutting through an old bullish order block. Right, so the market having created a V-shaped reversal on Wednesday from a daily discount array here. The fact that price didn't spend much time once it traded inside of premium, to me it tells me that either institutions were looking to buy around these levels, right? So algos looking to be positioned around these levels, or right, algos positioned around premium levels, right, started taking profits at these levels here, clearing out positions. Because overall you can see the difference here, right, into how much time price spent around the highs and the lows, right? And you can see that the highs here are overall a phase of accumulation, while the current low that we have is a V-shaped reversal, right? I mean, maybe we could use the price profile of this curve to help us identify this, right? You can see that at the highs, right, there was a large phase of accumulation, right? And so now the question for the weekly profile is, whoever was accumulating in here, right, did those people take profits already at these levels, right? Or is this an accumulation from a higher time frame perspective to look to deliver price towards, daily, weekly discounted targets? Well, to be able to answer that question, we need to see what's located inside of this range, right? And based on what's located inside of this range, to be able to anticipate the daily profile. Okay, so we have to remember that from a discounted view on the daily chart, price created a V-shaped reversal from the lower half of the daily bullish order block. Okay, so 25% of the range. So in discount, we have the range of a bullish order block and the range of a bullish fair value gap. Okay, so to me, this level is very, very important if tomorrow will be, say, an expansion day, right, or at least an open, low, high, close profile. I do think that it is very likely that price will end up creating the low of day around the range of this fair value gap or the bullish order block. At 50% of the range, we have this, right? That large, obvious fair value gap located right inside of the range. And in premium, well, these are the same levels essentially that we saw going inside the previous daily profile, which was the range of a bearish breaker here. Right, you can see that this range of breaker comes in right at 75%. Now, this range is a bit large, right? Maybe it's just, I would only put its quadrants up if, say, New York opens inside of it, right? But so far, this takes a bit too much space on my chart. Also, right, around these levels, there's obviously the range of what I consider to be the low-hanging fruit drawn liquidity for the rest of the week, if, right, this is actually the weekly low. And this is something that we had looked at also yesterday. We have here a breakaway gap. Right, so this can definitely be here a low-hanging fruit target, right, in case that you're able to identify an open high low close profile. Open low high close profile, sorry. But I won't, look, if price first trades lower inside this level, right, I do believe that the drawn liquidity will be somewhere in here, right, so towards premium targets. Again, we're looking at that range, say, give or take of 30,000 for the rest of the week. If not, if the market were to trade higher and fail to inverse here, what is a bearish fair value gap, fail to close above an intermediate term high, and fail to reclaim a bullish order block inside of the range, then I do believe that either this will lead to a consolidation back inside of the range, or will lead to a continuation of the overall weekly trend, right? The expansion, consolidation, expansion, retracement, right? To be some kind of turtle soup inside of the range at 50%. Then only in that case will I assume that the weekly low is not in, right? But unless this scenario were to happen here, right, a rejection inside of the fair value gap of 50%, you know, maybe I'm wrong, but doesn't matter if I'm wrong or right. Obviously, all that matters is making money on a trade and being able to find a good opportunity based on where you believe your drawn liquidity is. But I just have a hard time seeing price trade lower from these levels without first having a shakeout higher. That's all. Until the market were to prove this to me, okay, a shakeout above one of these intermediate term highs here at a key time of day, I'll just go inside the day assuming that the profile of day will likely be open, low, high, close. Because again, here the narrative is this was Wednesday, and Wednesday traded in discount and created a V-shaped reversal out of it. Overall, we saw that this aligned with the range of standard deviations here. Okay, so let's do a little recap. We saw price yesterday leaving a large rejection block behind. Most importantly, when and where was this rejection block created? It was done on a Wednesday, right? So key turning point here for a weekly profile, especially if this is going to end up being, say, a bullish reversal profile on the week. Wednesday is the perfect time to make the low of week. And where does it happen? Well, it happens inside the lower half here of the discount bullish order block. On the 3-week look back, we saw that price, right, not only traded in discount inside of the order block, but created a divergence at the range of the 3-week look back. Okay, so to me this level will be very important here. Right, this more or less aligns with this level here, right? Um, I'm gonna want to see if I'm bullish this level become a reclaimed bullish fair value gap, and if I'm going to be targeting the previous daily low here, right? So having a premium target, then I need to see this fair value gap hold as an inversion array. And here on the 3-day look back chart, we actually didn't talk about the phase of price delivery. Okay, well, price comes from here a swing to Z, so a reaccumulation inside of the range, followed by Monday being a classic sell day. And then following this classic sell day, look, what's the profile of yesterday? Well, it's an accumulation to expansion to expansion to retracement to expansion. You know, in the moment when I was looking at it here, I believe that this was a swing to Z, but this closed pretty bullish in my opinion. Okay, so you know, it's typically not how a classic buy day would form, right? A typical classic buy day would form something like this. But the way that this traded here through the large fair value gap created in London through 50% of the daily bullish order block that got V-shaped, right? Quick, immediately inversed. You know, I would label this some kind of, well, I would still label it a classic buy. Okay, just because of the way that it closed. And most importantly, because of the fact that London expanded lower, making the low of day, right? And New York came back, okay, to the first of all, inverse this fair value gap, eventually came back to reaccumulate into it, and then expanded out of it. Okay, so I see this honestly as expansion, consolidation, expansion, expansion here, right? We identified that inside of the range, we have here a bullish fair value gap that cuts through a bullish order block, right? This is located at 25% of the 3-day look back, or 50% of the previous daily range, right? So this is going to be a very important level. You want to anticipate the low of day to form around this range here, if the profile of day will be open, low, high, close. Right, and then we saw that at 50% of the 3-day look back range, we have a fair value gap sitting right in the middle of it. Okay, so right, and this fair value gap has, as we saw, the range of an intermediate term high, and on the left side of it, there's a range of a bearish order block that has a large wick, and there's an old bullish order block. Okay, so just like the 4-hour fair value gap here, the idea coming inside of the day, in my opinion, should be that if price inverses this fair value gap, you can anticipate for the drawn liquidity to be, you know, maybe 50% here of the bearish breaker if you want to be safe, if not the high of Tuesday followed by a new weekly high. If not, if price trades to 50%, fails to inverse here a bearish fair value gap, fails to reclaim the range of a bullish order block, then this will likely be a turtle soup, okay, and then the drawn liquidity would be a new low of week plus more, in my opinion, right? This would be expansion, retracement, expansion in terms of a weekly profile. We'd still be looking at a classic sell, in my opinion. Okay, so I think that this covers it today. We looked at drawn liquidities, and we looked at the PD raise, right? And how the reaction at those PD raise should be able to give you an idea of what the drawn liquidity is. Okay, so good luck and good trading.